What's going on, guys? It's Groove back with another book review, and today we have A Wealth of Common Sense by Ben Carson. Now, with this book here, he just keeps things simple. There's nothing groundbreaking in this book. It's just kind of him getting his thoughts off and telling you like, hey, we don't have to complicate this thing. We can just keep it simple. That's how you invest for the long term, is you just keep it simple. So he wants to let you know, like right off the bat, there's no secret to making millions overnight. Like, this is just going to be a long journey, and you have to have patience on this journey. Like, it's going to take a while, and when you're on this journey, understand that it's not just about making money. Now, when people think about making money, it's quick, fast. We try to get it right away. And he wants to let you know that, when it comes to investing, you have to think long term. You have to think, we're investing for our freedom. We're investing so at some point in the future, we want to retire, we can kind of stop working or slow down our working. We don't have to work as much. So make sure you're thinking about freedom when you're investing and not just how much money can I make. Now, he does touch a little bit about trading, and he says that, most people today, they just want to trade stocks. Everybody wants to be a day trader today. The hard part about that is it requires a lot of emotional discipline. That's like the number one rule about trading. It's emotional discipline. You need to understand like your entry points and your exit points. And most people just don't have the emotional discipline to be a trader. So he just believes that you shouldn't really trade. He believes the majority of people should just invest in index funds, think long term, avoid the noise, because if you're watching stock shows or different podcasts on investing, everybody's always talking about ups and downs, what's going on in the economy, this and that. And he's just like, invest in a few index funds and just keep putting money in every month after month or week after week. Whenever you get paid, just, make it automatic and just do it over the long time. And don't think about the noise of what's going on in the economy. Just keep investing over the long term. I mean, and it's pretty simple. If you look at a S&P chart, it just goes up and to the right over time. So again, he just wants to reiterate, just ignore the noise and just invest over time. And that's how you build wealth. Even saying that though, he still says that as simple as that may sound, a lot of people find that difficult to do. So he talks about how one of your greatest tools as an investor is patience. We have to have patience. Patience to ignore the noise, patience to, during downturns with our stocks, or our index funds, we need to be able to understand like this, what are we doing this for? When you see your portfolio in the red, we need to think, okay, I have a plan of 5 years out. I have a plan of 10 years out. I'm not worrying about today. I know it's red or it's down 5%, but the plan is long term. Like, we're thinking 5-10 years out, and that will cool your emotions and again, give you you need that patience to be able to get through those red days. So he says that's one of the biggest tools of investing is again, you just need to build up your patience when it comes to this stuff. He also has a chapter on understanding when to buy. Like, a lot of people don't know when to buy. They think like they want to get in at the right time, so which keeps a lot of people out of the market when it comes to investing. And he has a whole chapter on dedicated to this story about how if you would have just invest at the top of the markets, you would still make money over a 10-year period. So he says it doesn't matter when you invest into the stock market, just keep investing, keep doing it month after month. Over time, your portfolio will grow. Your portfolio will be in the green. You will make money. It will compound over time. And it doesn't matter when you buy, whether it be the top of the market, whether it be the bottom of the market, somewhere in between. If you just invest for the long term, over time, your portfolio would be up. And with that said, it is pretty funny too. Like, I've talked to a few people and they're like, I have 5 shares of X, Y, and Z, or I have 6 shares of this. And it's like, are you going to buy any more? And they're like, well, no. And I'm just like, well, how did you even get the 6 to begin with? Like if you're going to play with the stock market, if you're going to invest, it needs to be something you do constantly over years. And that is how you come up in this game. That is how you build wealth, is you need to just make it constant and do it over years. And with that being said, he talks about having a plan. Again, with those people who had those 5 shares and they don't buy anymore, it's like, well, what are you doing? They don't have a plan. He talks about having a plan. We're going to have a 5-year plan. We're going to have a 10-year plan. Okay, in 10 years, I'm dedicating 10 years to stacking as much of these shares as I can. And then in 10 years, that's when we're going to sell. Or in 5 years, that's when we're going to sell. We're going to buy every month for the next 5 years, every month for the next 10 years. I'm doing this for my retirement. I'm doing this for my kids. Again, he says one of the biggest things you can do is just to have a plan and never get shaken out of that plan either. And then to end off, he just talks about how, focus on what things that you can control, as far as living below your means, saving money and investing. Don't worry about what the companies are doing, or don't worry about the stock market or what people are talking about online. Focus on what you can control. Live below your means, save your money, invest, and then just go live your life and just, make it automatic. And it's just pretty much that simple. Again, but, people's behaviors, they always let them get, their emotions just get the best of people because they're constantly checking their account. They're constantly checking their portfolio. And he says to just, make it automatic and just control what you can and set it and forget it and then just wait. Follow the plan. 5 years out, 10 years out, this is what we're doing it for. And that's pretty much it. Leave a like and subscribe if you haven't already, and I'll catch you guys in that next one. Peace.